My man right here said credit cards are a better option than Affirm because they offer cashback rewards, help build your credit more consistently, and provide stronger fraud protection. Yes, correct. My man is right. So when you're using your, like, this is a lot of stuff that people don't know. When you use your credit card, sometimes they give you longer warranty times for what you purchased than the thing you actually purchased. Like, let's take, for example, your iPhone, for example, right? Apple may say that your warranty is over in a year, but your credit card might cover it for up to 2 years, 3 years. You feel me? You just have to, that's some perks that some credit cards give you that you wouldn't have if you just bought something out in cash, or if you use something like Affirm. They usually don't give you those warranties. Those now, as of April, Affirm has just started saying that they were going to start reporting to Experian. So yes, they will report to your credit, but credit cards are still way stronger on how much your credit will be impacted based on how much you use it. Affirm is good if you buying something right now, you want to pay it off little by little, and then you want to keep building up that buy history. Yes, Affirm is cool and all that. Just make sure you're making your payments on time. A big thing that Affirm has over credit cards is that Affirm does not do utilization. So that means, like, it's not a credit card. So, like, they can't say that you use 100% of your balance, or you use 20% of your balance, or 30% of your balance, because they're giving you out a loan. So loans don't have utilization. But that's why it's different. That's why it could be better in that aspect. Also, Affirm usually give out higher limits than credit cards for the most part. I've seen people get MacBooks on Affirm, $1,200, $1,300. I've seen people get jewelry on Affirm, $3,000, $4,000. Like, there are benefits to using Affirm, but you don't have that same security as you do with a credit card. Like he said, credit cards, you swipe, somebody take your card or something, or you lose it, or whatever the case may be, and there's fraud on your card, like, your credit cards are usually going to give you that bread back. Affirm, let's say you buy some jewelry and you lose that jewelry, or, you know, somebody snatches the jewelry off your neck, or whatever the case may be, something happened like that, you don't have them same guarantees. So you definitely want to be smart about if you choosing credit cards, or if you choosing Affirm, or what's the other drink, Klarna, Afterpay, anything like that. Just be careful. And they also be having higher APRs. I mean, credit cards have pretty high APRs too. Some of them have like 30%. Affirm, that is fixed into your payback. So when they saying that, okay, you're going to be paying this amount back, that's how much you're going to be paying back at the end of the loan, with interest already built into the payment method. So there's no really getting away from that. If you trying to pay that off early, I know that some Affirm loans, like, if you try to pay it off early, you still got to pay the full amount. It's not just interest that you accrue based on your balance. It's like interest that you signed up to have at the end of your loan. So you got to pay that full balance off. So maybe an $800 product might be $1,200 with interest, and they say you're going to take 2 years to pay it off. You're like, oh, shoot, I got the bread right now. Let me pay it off in 2 months. Pay it off in 2 months, you're still going to be paying that $400 extra in interest. So you really just got to think about that. That doesn't work. It doesn't work like that for credit cards.